Hello everyone, welcome to this last lecture of week 4 for this course Metrics and Analytics of Marketing. In the last class we discussed about the customer segmentation in digital marketing. We understood the various aspects associated with customer segmentation in digital marketing. We tried to understand the various metrics associated and how these metrics help build a better revenue stream for the organization. Now in today's class we will try to understand the channel management matrix. As we know that various customers used to purchase product or a brand through various channels. Somebody may be preferring online channel, somebody may be preferring the offline channels. Somebody may be getting to know about a particular product from social media advertisement, somebody may be getting to know about a product from TV advertisement. Somebody may be getting to know about it from Instagram, somebody may be getting to know about it from let us say LinkedIn. So, which particular stream, which particular channel is actually giving you better business value? In today's scenario, in today's data driven world, it is possible to know, and accordingly we can plan our strategy so that we remain constant with our objective function, that is maximization of revenue or maximization of profit. So, let us dive more into this channel management matrix. Basically, the channel management matrix refer to the performance indicators used to evaluate and optimize how customer interact with a brand across various digital communication channels such as email, mobile applications, websites, SMS and social media. The way I will be behaving with a brand in LinkedIn may be different from the way I will be behaving with a ad campaign in, let us say Instagram or Facebook or through WhatsApp or in my email inbox. So, that will be different. There is a possibility that in Instagram, whenever I see a impression of a particular advertisement, I will just have a look at the video. So, I will have certain extent of engagement, but let us say the same advertisement is being delivered to my email, probably I will not even open that one. So, for a customers like me, for a potential customers like me, probably the Instagram is a better way to communicate as compared to email. So, in this particular topic we will try to look into these various aspects, how we can identify those people. Basically, when we talk about this channel management matrix, these are quantifiable measures which are used to assess the effectiveness of a company's distribution and sales channel. What is the extent to which the distribution is extended and what are the various channels through which the distributions are enabled. Now, why do we need the channel management matrix? First one is that we need to understand where and how your audience engages. Where is the traffic coming from, right? If I talk about in terms of digital marketing, then I need to look at where is my website traffic coming from. Is it from LinkedIn sponsorship or through Instagram sponsorship or through Google search engine optimization? Where is it coming from? So, that will give me an idea about, let us say in the future, where do I need to spend more, whether it is in terms of search engine optimization or in terms of boosting in social media platforms. So, I need to understand where and how our audiences are engaging with our brand. Then next one is tailor messages by platform to increase the effectiveness. The potential audience that is present in Instagram may be different from potential audience that is present in LinkedIn. Let us say, let us assume that LinkedIn is more of a professional platform and let us say Instagram is more of a hedonic platform. Now, the type of content that we will be delivering, the kind of content that we will be presenting in Instagram can be different in terms of presentation, not in terms of the message, may be different, right? So that we can attract the people from Instagram as well as we can attract the people from LinkedIn. The main intention is to make a efficient appeal, make a right appeal to the customers. Then ensure consistency and personalization in omni-channel marketing. Though the way of presentation may be different in different platforms, whether in online or offline platform, the way we will be presenting, let us say, or the way we will be putting our content in social media advertisement may be different from the way from the content that we are putting in a trade expo. But the primary message has to be consistent, because this is for the same product we are making an appeal to our customers. So this channel management matrix ensures the consistency and personalization at the same time in case of omni-channel marketing. So that is why these are important metrics. Now let us look at the scoring model for channel engagement. So what do we do? How do I calculate the channel engagement score, or how do I calculate the engagement score for a particular user? What we do? We can assign weights to channel behaviors. We can assign the weights depending on the score that is predefined as per the activity performed. So we can categorize the users as low, medium and high engagement users based on the score that is assigned to them. And then ultimately what we can do? We can apply scoring to segment the follow-ups. If you have a high engagement score, I can fairly assume that you are likely to purchase our product in near future. If you have a low engagement score, probably you are not ready as of now to purchase our product. One example of how we assign the engagement score can be, let us say, if you open an email, means you have some interest, you get a 1 point. If you click on this one, then it means that probably you are under consideration stage. So you will be assigned a 3-point score. You make a purchase, means you are our customer, or you make a sign up, there can be another score assigned, right. So this is how we can assign a score for various activities for customers. If customers are high on the engagement score, the customers are likely to be our customers, or they can extend to be our loyal customers. Let us look at the common channel management matrix. The first one is the open rate. As the terminology itself implies, percentage of emails or messages that is opened. Then click-through rate. Click-through rate is the percentage of users who clicked on the links in the message. Then bounce rate, percentage of message that is undelivered. This bounce rate is slightly different from the bounce rate that we talk in case of website metrics. So in case of website metric, bounce rate is the percentage of traffic in which there is only one page view. The user exit from the website just after viewing a single page. But in this context, the bounce rate is the percentage of messages that is undelivered. If I send a message to 1000 people and 10 people, I mean it is bounced back for 10 people, then the bounce rate will be 1%. Then another one is unsubscribe rate, percentage of users opting out of the communication, right. So nowadays we used to get a lot of email, lot of sponsored email. If we open that sponsored email, there is most of the time there is an option for unsubscribing. So unsubscribing rate actually helps us understand that, I mean it's a win-win situation for both the parties. On the for me, if I am unsubscribing, I am not interested, so that unwarranted communication is not required. At the same time, for them also it is a win situation, because of the fact that they do not need to put their time, effort and money to, I mean, communicate with me. It is unnecessary. Then engagement score, it is a composite metric based on the user interaction across channels, like we have shown in the previous slide. So these are some of the common channel management metrics. So each of these metrics has its own implications. For example, if click through rate is higher, then in that case what we can say is that the interest stage of the marketing funnel is on high. So, there is a potential, though it may not be an immediate purchase, there is a potential that the customers in the future will purchase our product, given that we keep engaging with the customers, right. Then unsubscribe rate, if unsubscribe rate is higher, then probably we are trying to tap into a wrong segment. So, probably the segmentation needs to be redone. Then let us talk about some of the conversion metrics. Basically, the conversion metrics track how effectively marketing activities turn leads into desired action. The desired action can be a purchase, it can be a simple sign up, it can be a download, or it can be a simple form submission. These metrics help the marketers quantify the final outcome of segmentation strategies and evaluate return on the investment. Remember that we do not just calculate the purchase conversion rate only, we also calculate the sign up, because if somebody is signing up and not purchasing a product, what it shows that the person is probably still considering your product. They may be your future purchaser, and who knows, they can be one of the valuable purchaser in the future. So, each of these metrics at different stages of the marketing funnel are important and they have different meaning at different temporal horizon. Conversion metrics are the key performance indicators that measure how effectively a marketing campaign leads to desired actions such as a sales, sign ups or downloads, as we have already said, right. So, from this I think it is very clear, I mean what is the importance of the conversion metrics. It helps us understand the percentage drop off at various stages of the funnel. Now, let us look at some of the key conversion metrics. So, CVR starts with CVR, that is conversion rate. What does it mean? It refers to the percentage of visitors who complete a desired action, opening an email, clicking through the given link, signing up, taking up your call, purchasing your product or repeat purchasing your product. So, conversion happens at each of these stages. So, let us say if we are talking about a purchase conversion, let us say there are 100 purchases from 1000 visit, then the conversion rate will be 10%. Then next one is the CPA. CPA means cost per acquisition. Sometimes similar matrix is used, which is called CAC, that we have described in one of our previous session, that was customer acquisition cost. What is it basically? It is the average cost to acquire a customer via a paid media. Let us say that we have initiated a marketing campaign which cost us 10 lakhs rupees and we get 1000 customers. From this we can attribute 1000 customers to this advertisement. Then what will be the CPA, cost per acquisition, will be 10 lakhs divided by 1000, right. So, this is how we calculate the cost per acquisition. Remember that cost per acquisition is always compared with something called a customer's lifetime value. It has to be higher than, I mean average cost of acquisition must be higher than average customer's lifetime value, otherwise the company will be in loss. It can be 2 times, it can be 3 times, it can be 10 times, but it is expected that average customer's value is at least 3 times of the cost per acquisition. So, we can look at this example. If you spend 10,000 to acquire 100 customers, then cost per acquisition will be 10,000 divided by 100, that is 100. Now, next one is the average order value. What is an average order value? How much an average customer is spending on a average transaction? It is the total revenue generated from a marketing initiative divided by the number of customers that is generated from that marketing initiative, right. Let us say I have invested 10 lakhs rupees in a marketing initiatives, and I mean 1000 customers can be attributed to this marketing initiatives, and overall revenue generated is 1 crore, then 1 crore divided by 1000 is the average order value. Look at this example, rupees 50,000 from 100 orders, that is means average order value is 500 rupees. Next one is cart abandon rate. This is the percentage of users who leave after adding the items to the cart without buying. So, there must be something happening at the last mile of the channel that the person has not purchased. They have put it on the cart, but could not purchase it. Normally, if you do so, let us say in a e-commerce site like Flipkart or Amazon, repeatedly whenever you open this particular applications in the near future, you will be flooded with the recommendation of that particular product. You will be reminded with the nudges like this is what you tried to purchase last time, would you like to purchase it now. It is very common in e-commerce, it triggers the retargeting flows. Retargeting means if you have left the abandoned after putting something on the cart, then the marketers will try to communicate, the marketers will try to remind you to with certain behavioral nudges. Next conversion matrix is ROAS or return on ad spend. So, definition wise it is total revenue earned divided by total spending in advertisement. So, this is one of the outcome matrix, it is like ROI, fine. So, let us say 25,000 rupees revenue on 5,000 ad spend. So, ROAS return on advertisement spend will be 5x. You can calculate it also in terms of profit. Let us say you know the variable cost per unit, then in that case you can compare it with respect to the contribution margin. Now, let us have a look at tools to track the conversion metrics. Google Analytics 4, this can be used to track the conversion rate, funnel drop off rate. Funnel drop off is nothing but let us say you create an impression for 1 lakh people and click through rate is, I mean how many people will click through the campaign is 1000. So, there are 90,000 people who dropped off at the first stage itself, and similarly as you keep coming down to a purchase, there will be more and more people who will be dropped off at different stages. This is called funnel dropped off. Then Facebook and Meta Ads Manager can be used for return on advertisement spend or cost per acquisition. Google Ads can be used for, I mean in the dashboard itself there are these matrix values you can easily find. Conversion tracking and attribution models. Then in Tableau we can custom dashboards and visualization. You can form your own custom dashboards and visualization. Now, let us quickly look at the strategic importance of conversion metrics. First one, it helps determine which customer segments convert the best. Where is my website traffic coming from? Is it from Facebook? Is it from Instagram advertisement? Is it from let us say LinkedIn advertisement, or is it from Google search, or is it coming organically? So, all this data can be captured in my dashboard. So, accordingly let us say I have spent a lot of money in Instagram advertisement, Instagram boosting, but what I could see that number of customers, number of people who got actually converted is much lesser in case of Instagram. Then probably in next time onwards I can reallocate some budget from Instagram to my LinkedIn sponsorship. So, that is why it is important. It is important to dynamically understand which expenditure is worth it and which expenditure is not. So, it allows the budget reallocation towards high ROAS audiences. As I said, return on advertising spend. If return on advertising spend in case of LinkedIn is higher than that of in Instagram, then probably we can reallocate the budget and keep seeing it whether there is a saturation, right. Remember that every channel will have its own saturation point. Let us say you spend 10 lakhs rupees, you get 1000 this one customers, another 10 lakhs you will not get 1000 customers, right. So, there is a marginal utility, diminishing marginal utility. So, for each of this channel the pattern of this diminishing marginal utilities are different. That is why it is important for you to understand where you should stop spending on advertisement through a certain channel. Then next one is aid in optimizing the landing pages, the creatives and offers for each of this segment, right. So, if we try to understand the entire marketing funnel, if we understand the conversion rate and drop offs at each of the stages when a customer go through this journey, then we will be able to understand what are the different interventions likely to be initiated in order to reduce the drop offs and increase the conversions. How can I do that? Probably let us say if bounce rate is happening from a particular page, if bounce rate is much higher from a particular page, in that case it is time for me to let us say redesign the user experience of that particular page, or probably I need to put some different content on that particular page, more appealing content on that particular page, right. Then creatives, the users in Instagram is not liking a song, but users in Facebook might be liking a particular song and we are trying to make an appeal through a song. But in case of Instagram, probably we are making an appeal through a, let us say through an adventurous activity or something like that. So, this is how we can actually categorize the customers depending on the channels. Now, let us quickly have a look at this conversion funnel mapping. It is similar to your marketing funnel. So, with the stage 1 is the awareness stage. You come to know about a particular advertisement, you come to know about a particular brand, you come to know about a particular product category. Next comes the interest. So, once you encounter the marketing advertisement about the product or brand, you might develop certain interest. Once the interest is developed, then probably you will do some evaluation and based on that you will take a decision which brand you need to adopt or whether you need to sign up from the product category itself. Then ultimately you will take a decision, you will take the action of purchasing or refraining from purchasing a product. So, what we can do, you can use the different metrics at each stage to evaluate the performance, right. For example, in the awareness stage, the metrics that we can use is that impression. In the interest stage, probably click through rate can be of interest in order to evaluate the transition from awareness to interest. In case of decision, probably let us say the metrics that we can look into is that conversion rate, and action probably purchase rate. So, all these metrics will have different meaning at different stages. So, now I will leave one exercise for all of you. What you can do, you can simply choose a business, let us say an e-commerce business, and then identify 3 key segments based on channel: email versus social media versus mobile applications. And you can also look into account the device or technology, whether it is a mobile user, desktop user, if it is mobile user, let us say Android user or iOS users. Then what you can do is build a metric dashboard comparing the following across your segment. One is the click through rate and another is the conversion rate. And then what you can analyze is which channel leads to higher conversion. Is it the let us say social media channel, or is it the email channel, or is it is the mobile application channel? Are the mobile users converting better than the desktop users? So, you can bring a lot of insights from this exercise. Okay, fine. So, what you can recommend an optimized campaign plan for the highest performing segment citing the metric insights. So, this is kind of, you can just take it as a exercise work and just run it at its simplest possible form, and then try to, probably you can come up with the insights from this exercise in our live sessions as well. Fine. Then I would like to conclude this session with a statement which says that metrics tell you what your customers do, channels tell you where they do it. So, together they tell you how to convert. So, channels may not have significant meaning in absence of metrics. Similarly, metrics may not have significant meaning in absence of through which channels these values are coming in. Whether I am getting a better conversion through Facebook or whether I am getting a better conversion through my traditional channels. Unless and until both these dynamics are working together, it is difficult for me to quantify the return on marketing investment. So, for better quantification, for better optimization, we need this channel management matrix. Okay. Thank you. I will see you in the next class.